this trade is the biggest macro trade of all time. And it's not just about this cycle. It probably goes into 2030 and maybe well beyond that. So it's a big one. So anyway, pay attention, everybody. I'm going to start to go through the charts of why this is the biggest macro trade in history.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. Raoul will share his views on the everything code theory, developed by global macro investor, centers on currency debasement. It impacts asset returns, inflation, and more. As populations age, productivity declines. Governments issue debt to provide services for an aging population. This correlation drives economic policies. Also, governments use liquidity to pay off debt, effectively devaluing their currency. This process affects investors worldwide. Let's join Raoul Pal in a conversation about these topics and more.
Firstly, I'm going to start with the everything code. The everything code is the proprietary thesis that we built at Global Macro Investor that we actually now run our portfolio for Xpan, investing in the very best hedge funds. We use this everything code as the basis. And it's the one where I discover that the debasement of currency is kind of everything and how it's very cyclical and it's understandable and forecastable as far as we can tell. Obviously, things can change. Nothing is a pure, perfection. But I think this is right, and it seems to be proving itself out right. So firstly, we observe that over time, the trend rate of GDP growth has been falling in the United States and all around the world. Current trend rate of GDP growth is about 1.75%. Why is it falling? If you remember, trend rate of GDP is driven by three key factors. 1, population growth. 2, productivity growth. 3, debt growth. So let's address these three factors. Firstly, let's have a look at productivity. Productivity has been declining over time as the workforce has been aging, and that lowers the trend rate of GDP. Debt, on the other hand, has been rising. But what we find is that household debt growth actually stops in 2008 because the banks just stopped lending to people, so it's just harder to accumulate debt. Also, corporates have also been paying off debt and have really not been growing as fast as GDP. But really, a lot of the debt growth is now driven by the central banks, as we all know. Currently, the US is running massive deficits and is financing it by issuing yet more debt. And we'll come on to that in a minute. But the key thing here, the thing that drives everything for the everything code and the world around us, the return on assets, the inflation, everything is driven by demographics. So here's the working age population, aged 15 to 64, trend rate of growth. It's been declining over time as the population ages. Those people are less productive. The older you get, the less productive you are. They had borrowed debts in their early years and now are debt tapped out. So this explains a lot, and I've talked a lot about this on Real Vision in the past. But we can also project forwards.
Bitcoin's fourth halving could propel its value to $100,000. This event cuts miner rewards, reducing new Bitcoin supply and potentially driving up its price. Reduces new Bitcoin creation, which may increase its value. Historically, Bitcoin's value has risen 127% after halvings. Fewer Bitcoins on exchanges and more institutional interest could spike prices. If trends continue, Bitcoin could reach $500,000 after 2025. The introduction of spot Bitcoin ETF and the halving supply cut suggest a bullish future for Bitcoin's price. Robert Kiyosaki, the celebrated author of Rich Dad Poor Dad, has recently declared that the U.S. economy is in a depression. His book's long-standing success lends credibility to his warning. Kiyosaki points to the low economic growth rates, 3.4% in Q4 2023 and 1.6% in Q1 2024, as indicators of the depression. He has consistently warned about economic downturns and criticized the current administration's policies. Kiyosaki also highlights the potential for a global economic crash and the risks in financial markets. The increasing national debt is a major concern for the U.S. economy's stability. Kiyosaki's insights underscore the need for strategic economic planning and caution in financial sectors.
And if you remember my piece about the retirement crisis, I've been introducing this chart for a while, which is the labour force participation rate versus the births-deaths rate. This is the births rate going forwards by 14 years. And obviously the birth rate drives how many people in the labour force over time. And it suggests that participation in the labour force should continue to fall over time. Now, we've had some pickup as part-time workers have come back into the workforce because people don't have enough money, and we'll see some of that too. But over time, we're going to see the labour force participation rate falling because the replacement of new people in the population is not as much as people leaving the workforce. And that is the problem that slows economies. It's affected Japan, now affecting China, South Korea, Taiwan, and most of Europe. So anyway, that is the megatrend. But this megatrend has some special qualities. When you strip everything out, and I keep saying demographics is everything, you find that the labour force participation rate is exactly mirrored by US government debt as a percentage of GDP. So what it says is as the less people in the labour force, the economy slows, but there's all of the services to pay for the old people, the government debt increases. That correlation is stunning, and that is an incredibly powerful chart to understand the world we live in today, why governments keep issuing debt, and eventually why they're having to print money to solve it. It's all a function of population. So what they do with that debt is they add liquidity into the system. That's the debasement of currency that I've talked about. And you can see the correlation between Fed net liquidity and the US government debt as a percentage of GDP. They're basically the same thing. Yes, the scaling's different, but overall, the trend is the same. So they're using liquidity to pay for the growth in debt by debasing the currency. It's called financial repression. The other stark thing that we found in the Everything Code is actually the real mechanism is that most of the government debt increase is just paying interest on existing debts. They're not actually borrowing a lot more to invest in the economy. It's basically servicing of old debts. And so there is a very strong correlation between the interest payments from the previous cycle and then the liquidity for this cycle. So i.e. they issue new debt, it comes up for renewal, they've already been issuing new debt again this cycle, so to pay for the interest payments from the last cycle, they debase the currency via the Fed liquidity, so they're increasing liquidity into the system. Now look at that curve, that's the expected path here, driven by the interest payments from the pandemic debt, which was a huge increase in debt. Now, this debt keeps compounding, obviously, because you're adding debts on top of debts on top of debts on top of interest payments. So I don't expect it to play out fully like this, but we should expect a big increase in liquidity going forwards, and that's crucial to the theory.
The FBI warns against using unregistered cryptocurrency services that don't comply with U.S. anti-money laundering laws. They emphasize the need for services to have proper Know Your Customer (KYC) protocols. Use only registered money services businesses (MSBs) that follow U.S. federal law. Check if a service is registered with FinCEN and ensure they perform KYC checks. The DOJ's indictment of Samurai wallet operators for running an unlicensed service highlights the crackdown on illegal crypto activities. The FBI's guidance is a response to the growing concern over the use of cryptocurrencies in unlawful transactions and the importance of regulatory compliance. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.